Canadian real estate is crashing at one of the fastest rates ever recorded in history. And today on this channel, I will be scaring the living shit out of every homeowner in the Fraser Valley with this information. I'm kidding. I'm joking. All right. I also own real estate. Okay. If we're going down, we're going down together. Canadian real estate is even cooler than most realize since hitting a record high 3 years ago. Real inflation-adjusted home prices have fallen sharply according to data from the U.S. Dallas Bank of whatever. Once thought an invincible and sure bet, Canadian real estate is in the middle of the second largest price correction ever, and it's still unfolding, especially compared to how long past downturns took to bottom. So we have Canadian real estate prices below 2017 inflation-adjusted peak. So here are Canadian real estate prices adjusted for inflation. We're currently at 202 on this index. We go back to the peak of 2017, 203. 8 years, no growth, adjusted for inflation. Now, I like this metric to understand where the value of real estate is, because you can't just look at the price of something, right? Because the price, as it's denominated in our fiat currency, is a moving target, right? So how do you know where the target is? You adjust it for inflation, or you peg it to some other asset like gold or Bitcoin or something else. And that gives you a good gauge of what the value actually is. Now, what I don't like about this metric is people are using it in the sense of like, they'll be talking about $1 million home that sold for 800 grand. And then they'll be like, this house is down 55%, or the person who bought this home is down 55% when you adjust for inflation. Well, not really. It's not actually like that, because if they bought it cash, then yes, they would be. However, for 9 out of 10 people, they're going to buy it using leverage. They're going to buy with 20% down. So the erosion of their investment will take place on the down payment, right? They will lose value on their down payment on the $200,000, not the $1 million. And the majority of people probably don't care about this metric whatsoever, unless you're an investor. And I would even argue that the bulk of investors probably don't even care about this, because they know, yeah, I'm losing money due to inflation, but so is the debt that I bought this house with. You know, the value of my debt goes down every year. That gets eroded because every year I get to pay it back with cheaper dollars. And if the market does rebound and the price of my home goes up 3%, well, it's actually going up 15% because I'm using 5 times leverage. So I can recapture a lot of those inflation-adjusted losses pretty soon. That's my thoughts on that. I know people are going to disagree, but anyways, even Canadian real estate prices are in disbelief over how sharp this correction has been. Real home prices moved up a minor 0.15% in Q1 2025, but remained 3.94% lower than last year. After adjusting for inflation, home prices are roughly cheaper than they were in 2017 in relative terms. If only household wages had kept up with inflation since then! Canada's housing crash is already the second largest on record. Here we are, negative 24.2% as per current day. The 80s was no joke, negative 32%. Now, what's weird about the 80s is I pulled up the Fred's residential property prices for Canada, and I went back to the 80s, and I don't know, that doesn't look like a 32% drop off. So I went on a search this morning, and I tried to find like an actual example of this negative 32% correction. And lucky for the viewers of this channel, I found just that. This home was purchased in $96,000, March 15th, 1980. And then they sold it a year later for $174K. A double up in a year. And then 7 years later in 88, they sold it for $61,500, which is a nominal 67% correction, right? So you had like the aggregate Canadian home value down 32%. But that doesn't mean there's a whole bunch of homes out there that weren't down 70%, 75%, possibly even 80%, right? So when you see negative 24% on aggregate price, there's a lot of markets that are probably down 50% already, day of recording, right? Back to this. What is clear is that Canada is seeing one of the largest real estate price corrections on record. Prices have fallen 24% since hitting a record high back in Q1 2022. Still shy of the early 80s crash, but it's already surpassed the one in the early 90s. Many may not have noticed this correction is unfolding faster than almost any before it. Canadian real estate bubble is collapsing at record speed. Technically not. This would be the record speed in the early 80s. And the crash that we're seeing right now is like if the 90s crash and the 80s crash had a baby, that's what we would be right now. We're like dead center in between those two crashes. It's taken us 12 quarters to go negative 24%. In the 80s, it took 14 quarters to go negative 32%. And the 90s took 26 quarters to go 21.7%. So I'm guessing that was the bottom of the early 90s. It took 26 quarters to get there. For pacing that, we got another 14 to go. But if we're like the 80s, if we're more like the 80s, we only need 2 more quarters to go until we're at the bottom. But again, we're if the 90s and 80s had a baby. So we're probably in the middle somewhere, maybe 20 quarters, 21 quarters, 22 quarters. I know people in my comments will be like, no, it's going to be 49 quarters. Or actually, it'll be never again. It'll just drop forever endlessly. Maybe. I don't know. But an interesting thing that I also noticed today, I think I've talked about it on this channel. I don't know if I've ever mentioned it, but I run a real estate team. I have like 8 or 9 agents on my team. I have partners on the team. It's not just me. And every Monday we do team meetings, and I kind of help the team with like, this is how interest rates work. And this is how you do this. And this is what you say to a client. And I try to train them, right? So I was showing them like, where's the opportunity in the market right now? And there's a few, the big opportunity that's been the opportunity for a while is if you're an upsizer, if you're going to sell something and then buy a bigger home, that's the opportunity. But also I've found that detached homes with a suite, specifically in Abbotsford, but I'm sure it's the same anywhere in the Fraser Valley, are now cheaper than 2-bedroom condos, depending on the condo you buy. Right? And I'll show you guys the numbers on this, okay? So I know that you can get a home in Abbotsford with a suite for $860,000. I just checked, there's none on the market right now, but there was last month. So I know there'll probably be more in the future. And if you did 20% down, 30-year amortization, your mortgage payment would be $3,300 a month, right? But you have a suite. It's a 1-bed suite. You probably rent it for $1,500, right? So now your cost is like $1,800 or $1,900 a month after you collect your rent to buy a detached home with a suite in Abbotsford. Well, you can get a newer 2-bedroom condo around $500,000, right? That's going to run you $1,957 plus a $350 a month strata fee, maybe $400. A lot of them are $400 now, right? So you're at $2,300, $2,400 a month for your 2-bedroom condo, and the detached home is $1,900. Now, I know some of you are going to say, well, you have more property taxes with the detached home. Yes, you do. But you don't have an additional $500 a month worth of property taxes. It's more like $200 a month. So no matter what, you're saving money buying a detached home instead of a 2-bedroom condo right now. For a long time, if you bought a detached home with a suite, it would be like the same price as a townhome. And then it was like you would save a little bit more money if you went with a detached home with a suite instead of a townhome. And now it's come all the way down to it is cheaper to buy a detached home with a suite than it is to buy a 2-bedroom condo. So I don't know how much more downside there is in the detached market, but I would imagine more and more people are going to do this math. And instead of buying a townhome or a condo, they're probably just going to buy a detached home with a suite or a detached home where they can install a suite. And that will increase the demand for detached homes. And as it is right now, like let's look at Abbotsford specifically, right? The inventory isn't sky high. Like look, if you compare it to apartments where this is all the way up here above pretty much everything else, or townhomes where it's the same story, and you look at detached, that's like basically in the middle, like possibly even on the lower end of historical inventory. The only reason why the prices have been going down is because look how depressed sales are. But if it's now become cheaper to buy a detached home, providing you can get the down payment, I would imagine that it shouldn't take much for sales to increase, right? Like a 50% increase from our current levels of sales is like an extra 25 sales. So basically what I'm getting at is that's the opportunity, in my opinion, right? If you sell your condo, move up to a detached home with a suite, that's a good option right now. If you just want to get into the market, detached home with a suite, good option. And I don't believe there's a whole ton more downside for detached homes, but I could be completely wrong. And as it stands right now, we are in the second fastest and deepest housing correction ever in Canada. The question is it going to remain that way? Or is it going to be the first fastest and deepest correction in Canadian history? And if you enjoyed this video, like, subscribe. If you want to chat with me about buying or selling in the Fraser Valley, there's a link down in the description. Otherwise, appreciate you for watching my content. I'm that Agent Kelly. I'm making moves to move you. Peace.